Hey everybody, hope this finds you doing well. This is Networkchain, and we're going to go over some of the bigger news stories over the past week. Let's go ahead and get started with the cryptocurrency market update. As usual, you can see Bitcoin is currently trading just under $74,000, down nearly 4% over the past 7 days. Ethereum still hanging on to that 2,000 level. It did dip under 2,000 earlier in the week. It's down 4% over the past 7 days. We have XRP is down just over 1%. Currently trading at $1.32. We have Solana trading at $81.80. It's down 3.5%. Then you have Hyperliquid now up to number 9, up over 13%. I believe it reached its all-time highs over the last couple of days. And then Dogecoin is now hanging on to the top 10 spot. The largest meme coin of them all is trading under 10 cents, currently down 2.18% over the past week. So we are hearing more and more about the tokenization of assets, particularly with securities, U.S. treasuries, bonds. These are the type of assets that are being held by trillions of dollars, and the DTCC, which is the Depository Trust and Clearing Corporation, they're basically like the middle person or middle company when you're making trades, particularly when it comes to stock trading or equities trading, for example. They're the ones that are behind the scenes when these transactions are being settled. So some people may remember the DTCC being part of the subject matter of the GameStop short squeeze when Robinhood and some of the other brokerages ended up suspending the buy button for GameStop. And a lot of that had to do with the DTCC and their subsidiary, because they require that there's a certain amount of funds that need to be available. And Robinhood got to the point where they were not going to be able to pay what was basically a margin call during that particular time, so they suspended the buying. Now, obviously, there was a congressional hearing about it, and now that during that time, the settlement for trading was what they call T+2. So basically, it took 2 business days for a transaction to actually settle. Even though you see in your account when you sell a stock, for example, you see the trade happen right away on your brokerage, but actually behind the scenes, it doesn't actually settle for a couple of days. So then they move to T+1. So basically it takes about 1 trading day for the most part, or 1 business day for everything to settle. Now with tokenization, it will happen pretty much instantaneously. So this is going to be a major rehaul. If all of this actually comes to pass, it's going to be a major transformation when it comes to the transactions of all types of financial tools in the traditional finance system. And the DTCC will actually be launching their first pilot, I believe, in the next couple of months. I've heard July. We'll see if it actually happens. But in this particular article, you can see that they are going to be partnering with Stellar, amongst many other blockchains as well. Stellar Network is a public blockchain, and it'll be used across securities, payments, and remittance applications. You can see that the collaboration represents another step forward in DTC's efforts to build an open, interoperable digital infrastructure that bridges traditional and digital markets. And that's basically what this major transformation is. An interoperable meaning that depending on who they're transacting with, or who you are transacting with, they may be using different blockchains. For example, Robinhood, they already offer tokenized stocks over in Europe, and they use Arbitrum, which is a layer 2 of Ethereum. So we're going to see all these different types of blockchains that are going to be able to basically interoperate in between each other, and they need to be compatible in order to be able to do certain transactions. And so this is what part of this pilot program is going to be about, is being able to evaluate tokenization use cases for eligible asset classes, and it includes opportunities to tokenize highly liquid assets such as constituents of the Russell 1000, ETFs tracking major indices, and U.S. Treasury bills, bonds, notes, consistent with DTC's regulatory obligations. And the DTCC basically oversees over $100 trillion in assets. So you can see the type of market that blockchain technology could potentially be infiltrating. And so that's why we believe blockchain technology, including Bitcoin, is still very much so in its early stages. Remember that Bitcoin is now only 17 years old at this point, and so we still have a ways to go. But when it comes to blockchain technology, and now it's starting to infiltrate traditional finance, we see the market and how it can progress in time and how it really could be the future of finance. Also, when we look at how many assets are actually being tokenized right now, you can see the distributed asset value is 31 billion, and the represented asset value in terms of the underlying asset is over 385 billion. And so you can see here that right now the largest pie of the tokenization bucket right now are U.S. Treasuries. Then you have commodities, so you could have tokenized gold, tokenized silver, things of that nature. Then you have stocks, which is a little bit over 1.5 billion asset-backed credit as well. And then a little bit of real estate, as you can see. But basically everything is going up in value over time. From even the beginning of last year, we're seeing basically many multiples in some of these different types of assets. So we definitely see that tokenization is a real thing. It's continuing to grow despite the bear market that we're in with cryptocurrencies right now. So it's just another indicator of where we see the future. And in the meantime, things are happening in the background, and that's actually a good thing. Even during the bear market, we're seeing that progress is continuing to be made. Of course, we talked about this a couple of weeks ago. The Clarity Act, the most recent draft, was passed by the Senate Banking Committee. So now it's going to be proposed on the Senate floor. They will have to be the ones that vote on it next before it gets to the president's desk. And so there's still a couple of layers before it could actually come into law, but there's still naysayers, there's still opponents to the Clarity Act, or at least the way that it's written right now. You can see that supporters say the Clarity Act would make the U.S. the global leader in crypto regulation and influence policy abroad. A lot of countries wait on the United States before it makes a move. That's what happened when it came to the Genius Act, which is basically a stablecoin regulation. A number of countries ended up revamping or proposing and then enacting legislation with regards to stablecoins after the U.S. And so a lot of them are waiting to see what happens with this Clarity Act before they decide to go ahead and move forward with their own type of regulation as well. Critics, for example, Senator Elizabeth Warren, it could weaken anti-money laundering standards worldwide. But actually, we have found that the U.S. in particular has been able to seize billions of dollars worth of cryptocurrency using the blockchain, because some of these ledgers, most of them are publicly available and able to be seen and tracked. And so it's actually fairly difficult, especially depending on the type of cryptocurrency that is used, to be able to move these funds around without being tracked in some way, shape, or form, or at least be able to find out where the money is coming from by being able to look at what's happening on the public ledger. So obviously this is something that the senators and other congressmen and women are going to be still continuing to work on as they iterate the Clarity Act. And the bill would legalize most crypto activity in the United States, and it would move much of the industry under the CFTC as opposed to the SEC, which is the Securities Exchange Commission. There will be some that would be regulated by the SEC, but other cryptocurrencies would be regulated by the Commodity and Futures Trading Commission, which is the CFTC. So we know that the DTCC is looking to tokenize assets and will be launching their pilot program in a couple of months. We know that the Clarity Act is on the Senate floor for vote. And now we're also seeing brokerages like Robinhood are going to let agentic trading be a part of their platform. Agents will be able to trade via the Model Context Protocol, which is basically the protocol that's able to connect agents to outside sources, other third parties, to be able to do things on your behalf, whether it's being able to go to another site and purchase some type of paid program membership, or be able to do any other type of transactions outside of your platform. Now with Robinhood, you'll be able to basically speak to it or build it in a way that it would trade and do things for you on your behalf without you actually having to do anything on your own. The agent will do it for you. And so they will also be able to use and have been able to use now cryptocurrency and blockchain technology. And this will probably be one of the biggest ways that agentic AI agents will be able to move money back and forth. And we talked about that in a couple episodes prior with regards to how AI will be using blockchain seamlessly with something like what Robinhood is proposing, but we can do it decentralized as well. And that's why blockchain technology definitely will come into play when it comes to a decentralized version of agentic AI. So we're seeing that there's so many things that are happening when it comes to blockchain technology and how it's emerging and how it's transforming the way that we transact, particularly when it comes from our finances and how we trade and sell and buy and hold different types of assets, from securities as well as commodities. So we want you to make sure you check us out here on X as well as Instagram. And we, of course, really appreciate you checking us out here on YouTube every week. We thank you so much for watching, and we look forward to linking up with you soon on the Networkchain. Stay tuned. Take care. Bye-bye.